All right, crypto fam, buckle up. The market is moving at lightning speed, and if you're not plugged in, you're missing out on the biggest moves. Bitcoin Bulletin is live with the updates that matter. We've got institutional capital making seismic shifts, and we're starting with a massive migration from Bitcoin to Ethereum that's already shaking up the charts. What's driving this? We've got the details. Next up, we're asking the million-dollar question. Will Fed rate cuts spark the next Bitcoin rally? Fresh U.S. jobs data just dropped, and it's got traders buzzing about potential interest rate adjustments. We'll break down exactly what this means for Bitcoin's price and whether we're on the verge of another surge, or if something else is holding it back. And speaking of Bitcoin's price action, we're seeing some critical levels being tested. Is BTC weakening, or are the bulls about to make a strong comeback? We're analyzing the charts and the key support and resistance levels you need to watch to understand where the price is headed next. Finally, we're looking at the demand side of the equation. CryptoQuant is cautioning that Bitcoin Treasury demand might be weakening. What does this mean for the market's foundation? We've got the latest analysis on institutional buying habits and what it signals for Bitcoin's future. Stay tuned for all this and more. Don't forget to smash that like button, subscribe, and turn on notifications. Is Ethereum eating Bitcoin's lunch? The institutional exodus explained. Institutions are ditching Bitcoin ETFs in droves, funneling billions into Ethereum. What's behind this massive capital migration? We're talking about a staggering $751 million outflow from Bitcoin ETFs in August 2025, contrasted with an almost $4 billion influx into Ethereum funds. This isn't just a minor shuffle. It's a clear signal that investors are hunting for better yields and smarter risk management, finding it in the world of ETH. This shift has already sent ripples through the market. Ethereum's price surged by about 25%, while Bitcoin saw a 6% drop. This performance divergence highlights a growing institutional appetite for Ethereum, fueled by its booming decentralized finance, DeFi ecosystem, and lucrative staking opportunities. For fintech startups, especially in Asia, this is a game changer. They're rapidly adopting Ethereum for payroll automation, leveraging smart contracts to minimize errors and enable near-instant cross-border payments. The integration of stablecoins like USDC allows employees to receive salaries in their preferred currency, and Ethereum's quick 13-15-second block confirmation times are perfect for real-time payments. However, this embrace of Ethereum isn't without its hurdles. Regulatory ambiguity surrounding its classification as a commodity or security, despite recent ETF approvals, continues to be a concern. Compliance with AML and KYC regulations also demands innovative solutions like zero-knowledge proofs. For crypto-friendly SMEs in Europe, this means navigating the EU's MiCA regulation while seeking to cut costs and streamline cross-border transactions. The tokenization of real-world assets for compensation is also emerging as a new frontier. Analysts are closely watching how this institutional pivot impacts the broader crypto market, with many seeing Ethereum as the new powerhouse for innovation in payroll and beyond. The implications for traditional finance and the future of digital asset adoption are immense. Don't go anywhere. The market's next big move might be just around the corner. Next, we're diving into whether the Federal Reserve's next move could finally ignite the Bitcoin rally we've all been waiting for. Fed rate cut hopes versus Bitcoin's muted reaction. What's holding BTC back? The markets were electrified by weak U.S. jobs data last week, fueling expectations of 3 Federal Reserve rate cuts by year-end. Stocks surged, but Bitcoin's rally was surprisingly short-lived and subdued. We saw non-farm payrolls hit a dismal 22,000 in August, far below July's 73,000, with June's numbers even revised to a loss of 13,000 jobs, the worst since 2021. Unemployment ticked up to 4.3%, signaling a fragile labor market, and Treasury Secretary Scott Bessent even hinted at a potential 100 BPS cut. Despite this dovish outlook, Bitcoin only managed a brief climb toward $113,000 before fading, dragged down by a slump in AI-linked stocks and the Nasdaq. By the weekend, BTC was hovering in the low $110,000s, further pressured by MicroStrategy's exclusion from the S&P 500. Even spot ETFs saw outflows, with BlackRock's IBIT experiencing its first outflow in 10 days, totaling nearly $160 million on Friday alone. Ethereum fared even worse, with over $780 million flowing out of ETH spot ETFs last week, including a massive $446 million on Friday post-jobs report. While corporate treasuries from firms like Bitmain and SharpLink continued accumulating ETH, overall sentiment remains heavy. This week is critical, with investors keenly awaiting the Producer Price Index and Consumer Price Index reports. Economists predict PPI to rise 0.3% MOEM and CPI to hit 2.9% YoY, with core CPI at 3.1%. Any upside surprise in these inflation figures could derail rate cut hopes and dampen crypto market sentiment, just as a hot PPI reading did last month. Market watchers are closely observing whether fading economic growth and the Fed's potential policy easing will be enough to overcome current market shakiness. The upcoming inflation data is poised to be the deciding factor for a potential crypto rally. Could this be the turning point for Bitcoin's price action? Stick around as we break down the critical support and resistance levels that are defining Bitcoin's immediate future. Bitcoin's price dilemma: bulls under pressure as support levels waver. Bitcoin's price is currently struggling to reclaim the $111,500 mark, consolidating in a critical zone that could lead to further downside if bulls falter. After a brief recovery attempt above $112,000, peaking near $113,500, BTC experienced a fresh decline, breaking below key levels including $112,000 and $115,000, and even testing the $110,000 support. The immediate low was recorded at $110,039, and the price is now consolidating, showing a slight move above the 23.6% Fibonacci retracement level. However, bearish sentiment persists below the $112,000 resistance. Bitcoin is trading below its 100-hour simple moving average, with a bullish trend line forming around the $110,500 support on the hourly chart. Immediate upside resistance lies at $111,250, followed by the crucial $111,700 level, which also aligns with the 50% Fibonacci retracement. A decisive close above $112,580 could pave the way for a move towards $113,500 and potentially $114,200, with $115,000 as a major target. Conversely, failure to break above the $112,000 resistance zone could trigger a fresh downtrend. Immediate support remains at the $110,500 trend line, with a more significant barrier at the $110,000 level. Further losses could push BTC towards the $109,350 and $108,500 zones, with a major support at $107,500, below which a sharp decline is anticipated. Technical indicators, including the hourly MACD losing momentum in the bullish zone and the RSI falling below 50, suggest caution for short-term price movements. Traders and analysts are closely monitoring these levels, as a break below key support could signal a deeper correction, while a decisive push above resistance might reignite bullish momentum. But what happens when the big players start to play it safe? We're turning our attention to the subtle shifts in institutional demand that could impact Bitcoin's long-term trajectory. Is institutional demand weakening? CryptoQuant flags caution for Bitcoin treasuries. While Bitcoin treasury companies were a hot topic at the recent BTC Asia conference, holding a record 840,000 BTC, a new report from CryptoQuant reveals a more cautious approach to buying. The average purchase size has dramatically shrunk. For instance, Strategy bought only 1,200 BTC per transaction in August, and other firms averaged 343 BTC, an 86% drop from early 2025 highs. This signals smaller, more hesitant buys, potentially due to liquidity constraints or waning conviction. This trend is evident in transaction volumes. While deal activity remains high with 53 deals in June and 46 in August, each transaction involves significantly less Bitcoin. Strategy acquired just 3,700 BTC in August, compared to 134,000 BTC at its peak last year. This decline in average deal size suggests treasuries are active but unwilling to commit large capital blocks, reflecting a more cautious market psychology. This is a concern for investors, as Q2 price growth was largely driven by such accumulation. In late August 2025, institutions were absorbing over 3,100 BTC daily against just 450 mined, creating a significant demand-supply imbalance. This current slowdown in demand raises questions about the sustainability of Bitcoin's price strength if treasuries continue buying cautiously rather than at scale. However, the BTC treasury sector is still growing, with 28 new companies formed in July and August alone, adding over 140,000 BTC. Asia is emerging as a key region, with Taiwan-based Sora Ventures launching a $1 billion fund for regional treasury firms. The central question now is whether this new wave of Asian investment can offset the shrinking transaction sizes from incumbent accumulators. Market analysts are watching this dynamic closely to gauge the future of Bitcoin adoption and price. And that's a wrap on today's top stories. Don't go anywhere, we've got a lightning round recap and your full call to action coming up next. All right, crypto crew, that's a wrap for today's Bitcoin Bulletin. We saw a massive institutional shift from Bitcoin to Ethereum, sparking significant price movements. We also explored whether Fed rate cut hopes can truly ignite the next Bitcoin rally amidst mixed economic signals. Bitcoin's price is facing critical resistance and support levels, making its next move pivotal. And finally, CryptoQuant is sounding the alarm on potentially weakening Bitcoin treasury demand, a key indicator for future accumulation. Don't forget to like this video, subscribe to Bitcoin Bulletin for all your crypto news, hit that notification bell so you never miss an update, and follow us on all our socials to join the conversation. We'll see you in the next one.